Good morning, all, and welcome to the trade setup right here on BloombergQuint Live. It was a super Sunday of sport yesterday, and I think it taught us both that sport can be cruel as well as it can be rewarding. And for people in Italy, while Wimbledon was a disappointment, the Euro Cup final certainly wasn't. Be that as it may, let's focus on markets because it's a pretty long trade setup. There are lots of data points to monitor. So the US markets had a fairly decent close in Friday, and frankly, it's not just Friday, by the way, viewers. And much as we would like to think that India is a great growth story and Asia is a great growth story and emerging markets are a great growth story, I think 2021 has shown that there's a clear demarcation between what the global markets and US in particular has done versus what the Asian screen has looked like. Look at this story on the BloombergQuint website, and it shows you how Asian stocks have slumped relative to global peers this year. So Europe also, select parts have done really well. US, of course, has done very well. Asia, relative, has been a bit ho-hum. You have to admit that. Let's see if there's a pickup in store or could there be some issues going ahead. So I think that's the thing that you got to watch out for. But in today's session, by virtue of what the US markets did and the risk appetite there, I think Asia is probably poised for some good gains. So Nikkei is, of course, leading the charts, but the others are not far behind. We have very few losers, if you will. In fact, hardly any index which is having a corrective move. And I wouldn't be surprised if the SGX Nifty 2 has a good rocking start in the session today. So we'll have a start which is good. Since stock futures in the US are flattish, we'll probably not have a day wherein we will buckle down under any bit of pressure. Yes, it's an important week with a lot of data points, but I doubt that there is some issue at hand. So let's take stock of what happened last week. Then I'll tell you what should be watched out for this week as well. But first, what happened last week, and my default option, the MOV function on the Bloomberg terminal, it gives a great idea of what happened in Friday's session, advanced decline ratios, what sectors did well, what did not. So look at this, about 264 to 236, almost even Stevens, but slightly in the favor of the advances. But it's the nature of the moves that happen. So if you look at the Nifty 500, which is a fair representation of the larger listed universe, the losers had losses only to the tune of 2-3%, nothing too dramatic. So while the index stayed flat, the top loser was Tasty Bite, which is down 4%, then Infibeam and AI and some of the others. But the gainers had some big moves. Edelweiss is on a roll ever since the talk about Rakesh Jhunjhunwala increasing stake came out. But Jindal Stainless, 9% higher. IRB Infrastructure at a 7.5% move. Granules, and that might come in a bit of a stick today, but 7% up for that one. Polyplex, PNB Housing, you name it, and the stocks did really well. So that's the long and short of the story in Friday's session, that the gainers did well, the losers didn't fall as much. Now, what does all of this mean for trade today or for the rest of the week? I think CK Narayan's column encapsulates that perfectly. Every Monday, I give you a glimpse of that because I think he's just such a fabulous observer of the market that his observations merit a mention. And in his story that he's put out on BloombergQuint, he's mentioned, look at this, and I think technical chartists will be able to tell you better. I'm not a technical expert, but just reading this story the way I did, the Nifty seems to have formed a bit of a diamond pattern. Apparently, these patterns usually happen at the signs of a reversal. And he says that if it closes below 15,600 or thereabouts, then there is a confirmation of this downtrend. But the larger part is that while the index is or may be looking at a bit of a reversal, mid caps and small caps are certainly not. I have some data for you, by the way, before I move on to the next set of points. The mid cap, this is from a Motilal Oswal note, which says that the mid cap 100 and the small cap 100 have outperformed the Nifty since March. The mid cap 100 and the small cap 100 have delivered 13 and 8 consecutive months of positive returns. It would by far be the highest for the mid caps, and for the small caps, it's the second highest. Can you imagine 13 straight months of positive returns for the mid cap 100? The broader market strength is right out there, and a sign of that is the kind of response that we saw to the two IPOs, right? Most of you must be knowing, but I'll still bring it up for people who didn't know. GR Infra Projects, 105 times demand. Clean Science and Technology, 95 times demand. This is just stupendous. But by the way, for all those making those comments about how if this money was deployed in the secondary market, then it would have been great, or it's money sucked out from the primary market, that's not the case. This is financing, really. So don't mix the two. The money that goes into this IPO subscription numbers, essentially financing money, right? So not meant to come in the markets any which way. So don't mix the two, but just that it's a sign of some bit of risk appetite for companies in which there are perceived gains. So that's great news for the mid caps and small caps. For this week, what's to be watched out for on the macro front? Watch out for IIP and inflation. Watch out for wholesale price, WPI inflation, and export import and trade balance Monday, Wednesday, and Thursday. So those are the key points to watch out for in terms of results. IT takes over the first half of the week, and BFSI takes over the second half of the week. So Mindtree, Infosys, LT Tech, L&T Infotech, not a IT company, but still Cyient, Wipro, Tata Elxsi. That's the list of names really for the first half. Dodla Dairy, the new kid on the block, and Tata Steel, BSL would be interesting to see as well, as a reflection of what could happen to metal counter numbers. And then, of course, the NBFCs and banks take over HDFC, AMC, and L&T Finance on Friday. And on the holiday, HDFC Bank, extremely important set of numbers. Good to see how they've won out in the first quarter. So that's the list that you should be aware of for this week. Now, stocks which will be active today, and that list also is not too short. I'll try, and I obviously can't capture everything, so I'm capturing a few that seemed important to me. NMDC, they cut the iron ore prices by 200 to 230 rupees per ton for the July deliveries. Now, please be mindful, viewers. One, NMDC, the stock has had a corrective move already because of the OFS. And this is a very small token cut after the series of price hikes that NMDC has had. So if you think that this means, it could well mean that there could be more cuts coming. I don't know about that. But if you think that this alone signifies that, wow, prices have crashed and therefore you should go and short NMDC, I would urge you to think again. DMart, the numbers, okay, really. I mean, the Q1 numbers, of course, the gross margin fell 110 basis points at 13.1% versus the estimated 15.4. The PAT was at 115 crores versus an estimated 159 crores as per Bloomberg. And the PAT margin stood at 1.8% due to weak gross margins. I already mentioned how gross margins fell about 110 basis points. I think compared to Q1 FY20, because Q1 FY21 was a washout, Q1 FY20, DMart is probably at 60%. Not the best of quarters. Could it open up? And this was to be anticipated, right? Because we didn't have we had a quarter full of lockdowns, but still, I think weaker than what most people anticipated. Motilal Oswal note on DMart says that expensive valuations, risk of a moderation in growth, owing to a strong traction for online retailers in a post-COVID world, and the presence of deep pocket players like Amazon and Reliance Retail restricts the near-term upside. They retain the neutral rating and a target price of 3220. I think Goldman Sachs has done the same, probably changed the rating. I don't know, but the prices is around 3,200, 3,300. One more brokerage has a price target of 3,600. Between Morgan Stanley and Goldman Sachs, I'm a bit confused. But I do know that Citi said that their target prices are substantially lower than the current market price. So depending on which analyst or which brokerage house you have faith in, you could figure out whether you want to trade Avenue Supermarts or no. Doesn't promise to be a great big bang upside to Avenue Supermarts in today's trade. So that's something that I can safely say. But let's wait and watch. It's a strong stock. Keep that in mind. Other stocks in focus because of Q1 updates or results. Concord, the Q1 total volumes rose about 35%, which is pretty strong, I thought, though a YOY basis, so not quite comparable. And therefore, if you look at it on a QOQ basis, it'll look very, very weak, I think. BEPL, Q1 revenue up about 133% at 232 crores. Delta Corp on a quarter-on-quarter basis, because last quarter obviously was completely shut, right? Tourism was shut. So I'm comparing QOQ. Q1 loss at 28 crores versus a profit of 57 crores. So this one has had a very weak quarter, Delta Corp. I think the management has said, though, that it won't impact the net worth of the company negatively. Let's wait and watch. Maybe the stock could react negatively. Remember, I was talking about granules and it could have some fun and games. Now, the last 2-3 days, it's been going up because there's a rumor that in the whisper circles that granules might be close to a deal. Various prices came out as well. I don't want to get into the rumor mills, but I do want to point out this tweet that came in from one of the officials of granules saying that rumors can be frustrating, especially when there is absolutely no basis for them. No basis. So, well, they've put it out that there is no basis for these rumors. Let's see if the stock has a corrective move today. The other one, and a really important pocket that all of us should be monitoring today, are the small finance banks and the holding companies. Now, what happened, and I'll bring up the BloombergQuint tweet, which will tell you what has happened. So most of you must be knowing, but this is what's happened. The RBI has permitted the bank to submit the scheme of amalgamation for approval, which is essentially the holdco and the bank doing a merger. Now, this brings Equitas and the resultant entity, Ujjivan and the entity, and IDFC, all three firmly in focus. Investec has already said that because of this development, while it may still take time, but a 40% holding company discount seems excessive, and therefore they increased the target price to 170. IDFC, I believe the markets may believe that the IDFC will also benefit from this decision. In fact, LiveMint says that Ujjivan is already seeking a nod to merge with the holding company as well. So all of these are in focus. This Investec note, for example, says simple that I'll tell you the crux of what the note says. They say that they might do various structures, but whichever structure is followed, the current 40% holdco discount is unwarranted in their opinion. They cut the holdco discount to 20% and not 0% because there could be still uncertainty around timelines and the regulatory approvals. But essentially, the holdco discount, because of this development, narrows, and presumably narrows for the others, because people say if the precedent, right? If Equitas is allowed, the others would be allowed as well, IDFC, Jeevan and the others, and therefore the holdco discount in all of these could discount. So watch out for the holding companies. They could benefit in today's session. That could well be the pocket. You need to do your math, by the way, to figure out which is trading at what discount and therefore what kind of trading upside exists. Not because I'm doubting the upside, just because you need to know the extent of the upside. So keep that at the back of your mind. And lastly, viewers, two large caps that I would urge you to watch out for. I think Adani Ports, from whatever little I learned, Gautam Adani is going to address the shareholders at the AGM today at about 10 a.m. or whatever, 10:15 a.m. or thereabouts. The street would be rife with rumors that maybe there could be some announcements. So do watch out for Adani Port and SEZ. So that's one stock. And I'll watch out for Tech Mahindra. Today I learned that CLS has given a positive note. Remember last week I told you about how Citigroup had opened a positive catalyst note on Tech Mahindra. That's interesting. Two brokerages opening some positive notes, and IT is in a strong mood, I think, despite what TCS did, as you saw in Friday's session. So do watch out for Tech Mahindra today. So that's the long and short of stocks that you should keep in mind. Net, Nifty, maybe not that great, mid caps and small caps, enjoying the run. So could last for a bit, stock specific action. Small finance banks, clearly the theme to watch out for today. Thanks so much for tuning in. Have a safe day. And if you're stepping out, please mask up.